What's going on, everyone? My name's Obi and welcome back to the Courtside Financial Podcast, where we don't just dissect the numbers, we talk about what's actually going on in the industry, in the market. You know, there's been a lot of people watching NIO like a patient in the ICU, and the question is, were they wrong to do so? Something remarkable has happened in the past few months that goes way beyond just good sales numbers. We're witnessing a fundamental strategic awakening that could reshape how we think about the evolution of the EV industry as a whole. But first, let's set the stage. Remember back in April, NIO hit a historic low of $3.40, a low that had even some of the most convicted NIO bulls scratching their head. The company was bleeding cash, posting massive losses, and quite frankly, to some people, it looked like it was circling the drain. But here's what's important to do in this market is to separate the noise from the actual story. Look underneath the hood, understand not just that things have changed, but why did things change? NIO's stock has since doubled since the April lows, but while everyone is celebrating the recovery, I want you to understand what's actually driving this transformation. It's not just about the L90 and ES8 success, though we'll get to those numbers shortly. It's about a CEO finally admitting what we've all been thinking. Lee Bin said at the ES8 launch something that should be framed on every startup founder's wall. If NIO continues to maintain high prices, it will be difficult to compete. NIO's survival is the most important thing. This isn't capitulation, folks. This is strategic clarity, and the market's responding because finally NIO is speaking the language of sustainable business rather than premium pricing fantasy. Let's talk about the numbers because they're staggering. The Envo L90 secured over 30,000 orders within 72 hours of launch. But here's what's really interesting about this vehicle. It's priced at 265,800 Ren to 299,800 Ren, which is 14 to 22,000 RMB below its pre-sale price. You're seeing a company that learned to execute what I call precision market surgery. They've identified their exact pain point. Families wanting large space with cost effectiveness, and they attacked it with surgical precision. The L90 is larger than the Xiaomi YU7, cheaper than the Wenji M9 pure electric, and comes with NIO's brand power. That's not accidental positioning, that's strategic market dissection. But here's the genius part. They learned from the L60 disaster. Remember how the L60 had great initial orders but terrible delivery execution? The L90 launched with delivery capacity from day one. No more promising the moon and only delivering disappointment. Now the ES8 story is more fascinating. We're talking about a vehicle that generated 30,000 orders in just 3 days of pre-sales. That's outpacing the L90's initial momentum. But the real story is price disruption. The old ES8 was priced between 498,000 and 598,000 Ren. The new ES8, 416,800 to 456,800 Ren. That's a price cut of 80,000 to 140,000 Ren. And under the battery as a service model, you're looking at prices starting at 308,800 Ren. This isn't just a price cut, it's market category disruption. NIO has essentially created a bridge between the 300,000 and 500,000 Ren segment. But here's what excites me most. They're doing this all while upgrading from the NT 2.0 platform to the NT 3.0 platform. Better performance, better efficiency, better features, and all at dramatically lower prices. That's not easy to do unless you fundamentally reform your cost structure. Let's talk technology because this is where NIO's long-term thesis either lives or dies. The NT 3.0 platform is everything that the NT 2.0 platform should have been. We're talking about 900 volt architecture, central computing instead of distributed domain control, and significant lightweighting. The old NT 2.0 platform is what you call kitchen sink engineering with 4 NVIDIA Orin X chips, massive component overhead, and hoping that just being able to battery swap would be able to compensate for all of these clunky problems. The NT 3.0 platform is engineering focused. NIO's self-engineered NX9031 chip saves about 10,000 Ren per vehicle. That's one chip compared to 4 NVIDIA or an X chip. This matters because it shows institutional engineering. The company that built the NT 2.0 platform was trying to be everything to everyone. The company building the NT 3.0 platform shows that focused engineering beats scattered capability every single time. Here's where it gets really interesting. We're seeing echoes of XPeng's 2023 turnaround strategy. Remember, XPeng discovered that their component costs were 20% higher than their peers, making price competition for XPeng almost impossible. They underwent massive organizational changes. They brought in Wang Feng Yang for supply chain changes. And the result? The P7 and the Mona MO3 became market disruptors through massive cost optimization. XPeng stock went from $7 to $26, a 276% move, because they realized that operational excellence is just as important as product excellence. NIO's following a similar playbook with a less dramatic organizational upheaval. They're reducing external procurement through in-house development, streamlining suppliers based on price competition, and establishing cost control centers. Their early signs are promising. Their Q4 guidance suggests 16 to 17% gross margins with 20% targets for the L90 and the ES8. Let's be honest about the delivery numbers though. NIO guided 150,000 units, with both NIO and the Envo brands projected to reach 25,000 units per monthly production capacity. If the ES8 can average 10,000 monthly sales in Q4, and early predictions or looking at the data suggests it can, we're looking at a very different financial picture. My analysis suggests that Q4 operating losses are around 800 million Ren, much better than the market is predicting with a 1.9 billion expectation. It's still a loss, but the trajectory is unmistakably positive. Here's the crucial point. They have only 11.9 billion Ren in cash. This is still, objectively speaking, don't get mad at me, objectively speaking, a company in the ICU, which is precisely why the ES8 battle and the L90 battle, they are essentially life and death for NIO. Now let's flip the script and talk about the elephant in the room. Traditional luxuries response. BMW just unveiled their iX3 with a 920 kilometer CLTC range and a 108-degree cylindrical battery. That's longer than the Xiaomi YU7's 835 kilometers. BMW chairman Zipse, excuse me if I'm saying his name wrong, but he made a fascinating comment. He said the 109-year history is not a burden. It's taught us how to build cars. So guys, this isn't defensive posturing. It's strategic positioning for what I call the experience premium. The iX3's recovery system achieves 98% of daily braking through regeneration. The Heart of Joy driving control system delivers sub 1 millisecond response time. So guys, this honestly is one of the more positive things I've said about traditional automotives, but this is engineering meeting innovation, and quite frankly, it's pretty impressive. What's happening here is a fascinating chess match. Chinese companies like NIO, they're racing down the cost curve to stay competitive. They've got great technology, they want to maintain premium features, but still while keeping cost competitive. When you look at a company like BMW, with a 109-year history, as we've said, they're racing up the cost curve while trying to maintain premium position. BMW's approach is telling. They're not making China-specific models just yet. They believe that the timing isn't right. They want their global integrity to be their differentiation. Meanwhile, companies like NIO, and I believe what NIO believes, but NIO believes that betting localized market understanding plus cost efficiency can win against global brand legacy. So objectively, who's right? Well, BMW only needs 3.2% of their market to understand their brand or value proposition. That's their global market share. NIO, on the other hand, needs to prove that they can maintain momentum beyond their product cycle. Anyways, here's my takeaway about everything I discussed today. NIO's transformation is real but fragile. They figured out how to make compelling products at sustainable prices, but they haven't yet proven that they could scale this across multiple product cycles and market conditions and global markets. BMW's approach shows that traditional luxury isn't really at the top, or legacy, I'll say, legacy or traditional, isn't really at the top of the market, but they're playing a different game. They're betting on experience rather than cost disruption. I don't know if that will bode well for them, but only time will tell. For investors, I don't think the question is, can NIO succeed over the next 12 months? I think early indicators are suggesting that they can. I think the question is whether they can build institutional capabilities that can span over multiple product cycles. And if you don't know what I mean by that, let's think about the Shenji NX9031 chip. That is helping out their entire product lineup. That is helping with their cost optimization. What levers are they going to continue to pull to be able to operate more effectively and operate more efficiently? That's the game we're playing here. Not just EV adoption, not just Chinese market dynamics, but fundamental questions that need to be answered about what sustainable market advantages actually look like in an increasingly competitive market. And honestly, that's what makes this space so intellectually stimulating and financially attractive. Anyways, that's a wrap on today's episode of the Courtside Financial Podcast. I hope you guys found some value in this. I hope you found it insightful. I hope you found it useful. I hope you found it, at the very least entertaining. If you found it to be any of those things, please click the notification bell icon. Please hit the like button. Please leave a comment down below, share the video. All that stuff really does go a long way in helping out the channel, helping us to reach a broader audience and ultimately serve more people. Anyways, happy Tuesday. This is Obi signing off of the Courtside Financial Podcast. I'll see you in the next installment. Thank you.